I'd like to welcome you to another Kali Tutors tutorial session. In this tutorial session, we'll be focusing on FAC 1502 assignment number 3. If you're new to our YouTube channel, please subscribe to get access to the latest public videos the moment that we upload them. If you'd like to access private content, please click on the join button to become a member. If you're using a smartphone and you don't see the join button, please feel free to download our application from Google Play. Simply search for Kali Tutors and the first application that will appear there is going to be our application. Okay, without wasting your time, let us look at one of the questions from assessment number 3. Okay, this question here will test your understanding of either VAT Input Account or VAT Output Account. But before we start discussing the question, let us just take a step back and discuss how VAT is calculated. Okay. What you need to know with these two accounts is that a VAT Output Account is a liability account. Remember, when you increase your liabilities, what you normally do is to credit that liability account. So, in terms of the VAT Output Account, what you're going to do is to work mostly on the credit side. What normally happens is that the VAT Output Account will have a credit balance. So, the starting or the opening balance of your VAT Output Account will be written on the credit side. In terms of the VAT Input Account, this is an asset, okay? So, in terms of assets, whenever assets increase, we debit the asset account, and whenever our assets decrease, we are going to credit that asset account. So what this means is that in terms of the VAT Input Account, you are going to work mostly on this side here because it normally have or generally has a debit balance, okay? VAT Input. So whenever you're given an opening balance for a VAT input, you are going to write it on the debit side, and a VAT output, you're going to write it on your credit side. So in terms of your assignment, the starting point will be for you to choose balance, okay? And in terms of the name of the subsidiary, this one will have balance brought down, okay? And then you'll write the amount here. In terms of your VAT Input Account, you are going to write balance, okay? And in terms of the subsidiary journal, okay, where this information is taken from, here you're going to have balance brought down. Okay, so this is normally going to be your starting point in terms of your VAT output and your VAT Input Account. The next thing that is going to happen is for you to identify the different subsidiary journals where you're going to get the totals for your VAT input. In terms of the questions that are given here, we are given all the totals, so we don't have to calculate the totals. You just have to know where to find the totals. Okay, so in this column here, this is where you're going to write the subsidiary journals where the information comes from. So here you're going to write the name of the account that is going to be debited in this transaction here. So whenever you credit a VAT output account, that means there is another account that needs to be debited. And whenever you debit this VAT output account, that means there is another account that needs to be credited. So you write the name of the account and also the source of information, and then the amount. Okay, I know that this might be too much, but I'm going to explain this further as we proceed with the assignment. Okay, but I just wanted you to have this general information. Okay, now that we have covered all the basics that we needed to cover, I think it is time now that we go to our questions and then try to understand what they are trying to do there. Okay. The question reads as follows. The following balances were extracted from the subsidiary journals of General's Bazaar Shop as at 28 February 20.2. Okay, and here they give you the cash receipts journal. In the cash receipts journal, we had a total for VAT input, and we also had a total for our sales columns. This is important here. Whenever you are given a subsidiary journal, it is important that you understand what is happening in terms of this subsidiary journal. Remember, our cash receipts journal is where we record whenever we receive money. So if we receive money, that means we should be collecting VAT on behalf of the government. So that tells us that we were supposed to have a VAT output amount. But in terms of what we are given here, they gave us the VAT input. And we know that this VAT input is recorded in the cash receipts journal whenever we grant a settlement discount. So this one here is the total for our settlement discount. And in terms of the sales columns, we know that in our cash receipts journal, the sales column is a VAT exclusive amount. Okay, so if we want to determine the VAT output from these sales here, we need to calculate that based on a VAT exclusive amount. This is not a VAT inclusive amount. This information is very important. Okay, so next we look at our cash payments journal. In the cash payments journal, we are given the purchases column. This too is VAT exclusive. Okay, so this is a VAT exclusive amount. In terms of our cash payments journal, what we will expect is that whenever we pay for something and they charge us VAT, that VAT is going to be recorded in our cash payments journal as VAT input. So we are supposed to calculate the VAT input, and we are going to do so using this purchases column, which is a VAT exclusive amount. Okay, then this VAT output that we are given here, this simply tells us that when we were paying for some of our items, we were given a settlement discount. So this is settlement discount received. Okay, settlement discount received, and this is what it's a settlement discount granted. So it is important to make this distinction because one of these will go to the VAT output and the other must go to the VAT input. Okay, but I'll explain that as we proceed. Okay, then we go to our purchases journal. In terms of our purchases journal, they give us the trade payables column. Whenever you're given the trade payables column, this is VAT inclusive. Okay, VAT inclusive. So if we calculate VAT, we'll calculate the VAT based on the VAT inclusive amount. In terms of our sales journals, we were also given the trade receivables column, meaning that this is a VAT inclusive amount. Why am I saying that the trade payables column and the trade receivables column are actually VAT inclusive? Remember, in the trade payables column, we record the amount that we are supposed to pay to other entities, and that amount must include VAT. Okay, and in terms of the trade receivables column, we record the total amount that our debtors need to pay in order to settle their debt, and that also includes the VAT. Okay, in terms of the purchases returns journal, we are given the trade payables column, which is also VAT inclusive, and in terms of the sales returns column, we are also given the trade receivables column, which tells us that this information here is also VAT inclusive. Okay, so let us look at the next sets of information. Okay, I think that's all that they have given us in terms of this question here. And then they told us that on 1 February 20.2, the VAT input account had an opening balance of 85,000 and the VAT output account had an opening balance of 124,400. The applicable VAT rate is 15%, And then the question then says, using the above information, compile the VAT input account in the general ledger as at 28 February 20.2, including the final closing transfers. Okay, so let us do just that. Before we begin answering this question, I think it will be most beneficial to you to see this example here and then look at the different subsidiary journals where this information comes from. Okay, in terms of the cash receipts, in that question they told us that they give us the sales figures, so the sales column. That simply means that we were given this total here, and this amount here is VAT exclusive. The VAT that is applied on this sale here has its own column, which we are not given in that question. So we are supposed to calculate this from this. Okay. And we were also given the VAT input column, which is where they record the settlement discount granted. So you have 1, 2, but you don't have this one here. Okay. In terms of the cash payments journal, they gave us the purchases column, and this amount here is VAT exclusive, and the VAT that is applied on this one is here in your VAT input. So if you are supposed to calculate the VAT input, you're going to calculate it from the VAT exclusive amount. Okay, so I'm just showing you all the different columns that they give us so that you understand what we are doing as we proceed. Okay, in terms of your sales journal, okay, I don't think they give us information with regards to this, but anyways, this is where we get the information. Okay, you need to know that if you are given the trade payables, this simply tells you that they have already calculated the VAT. So in this case, this one is a sum of the VAT amount and the purchases amount, okay, and so on. So that's basically what we are going to apply as we proceed to the next step. Okay, so now it's time we actually look at how to answer this question. Okay, so let us go back to our instruction. Okay, here they told us that we are supposed to compile a VAT input account. So the first thing that we must record is the opening balance of the VAT input account. As I have already told you earlier, the VAT input account has a debit balance. So we need to just copy the VAT. Okay, the VAT input account had an opening balance of 85,000. So that is what we are going to write here. Okay, if it has a debit balance, it simply means that we are going to write the amount here. So the amount is going to be recorded here. You're going to tell them that this is the balance. Okay, search for balance and then write the amount here. It's 85,000. Okay, 85,000, and you must record the date. Okay, so the date is going to be 1 February. This information was given to you on this statement here. On 1 February, the opening balance was 85,000. Okay, if you look at this VAT input account that you are given here, they've already told you the subsidiary journals that you are supposed to get the information from when compiling this. In terms of the cash receipts journal, if we go back to our cash receipts journal, so in terms of this cash receipts journal, we have this VAT input here. As I have already stated, this is the total for the settlement discount granted to our customers. The reason we are supposed to debit this is to actually reduce our total liabilities in terms of the VAT that we are supposed to pay to the government. We are doing that because when the sale transaction originally took place, we calculated the VAT output on the total amount that we expected that the buyer was going to pay. But since they are no longer paying the total amount, we need to also reduce the portion of the VAT output that is associated with the settlement discount that we have given them. So in order to do that, we simply go to our VAT input account and debit it. Okay, so that's what I am going to do now. Okay, so I'm supposed to copy this total amount. Okay, this money was supposed to come from our trade receivables. Okay, so that's important. Let's go back to our table. Okay, and then we are going to write the total amount here. Okay, we are going to write 4415. Okay, and then the name of the account that is going to be credited for this amount is going to be our trade receivables. Okay, so search for your trade receivables control. Okay, and this is going to be recorded on the 28th. Okay, so all this falls under the 28th. Okay, now that we have recorded this information, we need to look at the information in our cash payments journal. Okay, remember, whenever we buy something, okay, we need to claim back that tax charged on our purchases. So in terms of our cash payments journal, the trick here is for you to understand that you are supposed to calculate the VAT amount from a VAT exclusive amount. So this is a VAT exclusive amount. So in order for us to calculate the VAT amount, you can simply take out your calculator. You can use Kalituta's application to make your life easy, and I'm gonna show you just now how to do that. Okay, so when you are using Kalituta's application, it is important that you understand exactly what you need in order to calculate the different values. Okay, here we want to calculate the VAT amount. So, and we are given the VAT exclusive amount. So in terms of the calculator, you must choose calculate VAT inclusive and VAT amount, because you have VAT exclusive. So that's what we are going to do. We are going to calculate the VAT inclusive and VAT amount, even though the VAT inclusive value is not going to be used here. So what I'm going to do is to type the VAT exclusive amount here. It's 423,300, and then the VAT rate is 15%, and then you click calculate, and then you get the VAT amount. It's 63495. So this is what we are going to record in this document here, and that is going to be our VAT input. As you can see, we are not using the VAT output. We are going to use VAT input. Okay, so we are going to go back to our document here, and then in terms of your cash payments journal, what we are going to say is that this money comes from the bank. So we paid for these things using our bank. Okay, and the total amount in terms of your VAT amount is going to be 63495. Okay, so that is just that. And the last one comes from our purchases journals. Okay, so we need to go back to our purchases journals. Remember, in terms of the purchases journals, what we have is the VAT inclusive amount. So if we want to calculate the VAT amount, we are going to use the other option in terms of Kalituta's application. Okay, so now we have the VAT inclusive amount. So we need to calculate the VAT exclusive amount and the VAT amount. But what we are interested in is the VAT amount. Okay, so we click on this one here, and then we delete the values that we have at the moment, and then we go back to our purchases. In terms of our purchases, we have 265,900, and then the VAT rate is 15%. Then you click calculate. The VAT amount in this case is going to be 34,682 rands and 61 cents, and that's what we are going to record in this table here. So this is going to be the VAT amount. It's going to 34,682.61. okay, and the name of the account that is going to be credited for this transaction is going to be the trade payables account. Okay, it's going to be trade payables account. Okay, and now that we are done with everything on this side, we are going to look at the information on the other side. Okay, the date that we are going to record here is going to be the 28th, and then so under the purchases returns journal, let us look at the information that we are given. Okay, the purchases returns journal, we have trade payables column, and we are given the total amount, which means this is VAT inclusive. Okay, if this is VAT inclusive, we need to calculate the VAT amount and the VAT exclusive amount. So we are simply going to change the values on this application here. We are only going to change these values here at the top, and then we write 28471, and then click calculate, and then it gives you the VAT amount, which is 3,713 rand and 61 cents. And let us do just that. Okay, so here we are going to record this as 3713.61, and the account that is going to be debited for this transaction is going to be the trade payables control. Okay, this actually reverses the amount of VAT that we would have expected to receive based on what we had purchased. As you already know, whenever an asset account records a decrease, we credit that asset account, and that is exactly what we are doing here. This transaction is going to reduce the total that we would have expected in terms of VAT input. It's simply because we return some of the items, so we are no longer entitled to that VAT input. Okay, so once you have everything like this, there is only one thing that is remaining. The first step is to get the balance for this here. Okay, and then you'll write the balance here and write the balance here, and then you'll take the difference between the balance and this value here, and then you will record that as your VAT control amount. Okay, so that is basically how you compile a VAT input account. So let us use our calculators to calculate the values here. Okay, so take out your calculators and add these values here. Okay, my calculator gives me the value of 187,592.61. Okay, if that is correct, simply copy this value and then you paste it here. Okay, so it's 187,592.61. Okay, after calculating this value, simply subtract this value here from this. Okay, and whatever you get, you're going to write it here. Okay, so you're going to subtract minus. Okay, 183,879. Okay, so if you've done everything this way, then you should be guaranteed to get all 14 marks. Okay, please note that I'm starting with this one because I believe that if you've watched the bank reconciliation statement videos that I shared links to, you should not have a problem with that one. But the next video is going to be on the bank reconciliation statement. Okay,